What exactly are moving averages? So moving averages are very important, and we're going to figure out what they do here. So these lines right here on my daily chart are moving averages. This one, white, being the 200, and these are just how I color code them. You can color code them however you want, but these are my colors. Blue, that is the 100-day moving average. Yellow, 50-day moving average. Purple, 25-day moving average. What is a moving average? It's the average stock price over that number of days. So over 200 days, 100 days, 50 days. Now, why are these important? These are important. You hear them talked about on CNBC. You hear them talked about basically everywhere. You're going into this moving average. They play a very strong role in support and resistance. They also can give you clues onto if you should be getting into a stock, getting out of a stock, taking a long position in a stock, short position, based on where your stock price is relative to that moving average. So let's look at this. This is AMD. This is a stock that I like to look at all the time, and I like to use this as an example about a 25-day moving average and how important it is. We're going back here into the end of 2021. You notice that this purple line just brushes all the way across the screen, and you notice that the stock price stays really close to it throughout. So going back, you dip below the 25-day moving average here in January, and it stayed below. You bounced off of the 200. I wasn't planning on talking about this right now, but you see it. So this plays a very strong role in some type of support level. It's very difficult for AMD stock to drop below the 200-day moving average unless there's a ton of selling volume that's going to come into the stock. Again, goes back up, struggles to get through the 25, came above the 25 for a few days and fell back down. So my point in saying this is this stock has a very difficult time breaking through the 25-day moving average. So anytime, for instance, now that I see this stock moving up through the 25-day moving average, even though it's above it right now, I get a little bit apprehensive. So I'm going to go check my trend. I'm going to say, well, this is at the top. There's a good chance that this rolls down. I'm starting to get selling volume over 2 days. And historically, this has had a very difficult time staying above the 25-day moving average. Boom, I'm expecting this to fall, and I do think that that's going to happen sometime in the next few days. Again, I'm not predicting stocks here. All I'm doing is saying, based on history, based on what this stock does, it is very difficult for it to stay above the 25-day moving average. Let's pull up the SPY. SPY is a good example of how the overall market works in relation to moving averages. And this is something that you hear on TV from the pundits all the time. They say, well, SPY or S&P 500 is going to drop below its 200-day moving average, or drop below its 100-day moving average. Or the two curves, the 100 and the 200, are going to invert. So what they're saying is, when you start coming down to the 200-day moving average, it's a very bearish signal if the stock price drops below the 200. You notice here when this happened in February, all of these wicks on these stocks, on these candles, every single day there was just movement. You didn't know which way to go, so that created wicks. As soon as this dropped below the 200 here in late February, this thing exploded to the bottom and really dropped below the 200. So when you get below these 200-day moving averages, especially on the S&P 500, you are going to get quant funds coming in there and computer funds, and they're going to be selling, and that's what pushes things down. And that's what you're seeing. That's what you saw go on the last 2 weeks. Now you're getting a little bit of a rebound over that 25. But historically, look, it's had a very difficult time breaking over the 25 here, I suspect the same thing is going to happen in here. This is how moving averages can help you.